Good morning, all. Welcome to the Node. I am Mike, aka Veteran Crypto, and I don't know about all of you, but I've had a busy morning. I jump on X every morning and try to start looking at the news, start looking at what's going on in crypto and DeFi and things like that, and really try to help people. It's as I always say, I do not know everything about crypto and DeFi. However, I do have a very deep understanding, and a lot of it is, thanks to David. But today, as with every day, we're going to focus on, two more projects that he's going to do a deep dive on, which is Plasma and Avantis. And we're going to get into the tokenomics of it because it is critically important that people understand what tokenomics are. And how that pertains to your connection to the success of a protocol or a chain. It's simply buying a token and watching the price move off of good news that's being posted on X does not mean that there is a fundamental connection between the two. It just means that there is retail out there responding, or market makers responding to that emotional trigger, from that, positive or negative news. That's all that means. That is pure speculation. That is not fundamentally, a part of the tokenomics. That there needs to be a connection through buybacks, through burns, through something. There needs to be a mechanism in place that returns the value that protocol, like Arrow. Love it or hate it. I know David's not a big fan, but 100% of the fees that are generated on the protocol go to VE Arrow lockers, or what's going to be stakers. And anything that's not paid out to them or to people that are contributing to liquidity pools is being max locked or burned. So taken, supply taken out of circulation. Canton has the burn mint mechanism, where if, and it is an if, it ever gets to a point to where it reaches equilibrium, to where the burn outpaces the mint, that makes it deflationary and could make the price go up. We need to understand the mechanics and the tokenomics behind these projects. I cannot stress this enough. And I see it day in and day out. It's so frustrating because I see people that I know are much smarter than me about crypto, and they are hyping these projects and not pointing out this simple fundamental fact. How's it going, David?
Good. I see in the chat that Fred again is already talking about dog shit. I love it, man. Dog shit.
Well, welcome, Fred, again. I don't know what dog shit and dog shit pool slope is, but welcome anyway. So, that is kind of the foundation of where we have gone as a channel, is because for some reason, either I'm totally up in the fucking night, or everybody else, or for the most part, I have seen people that are actually starting to say the same thing that we are, pointing out the flawed tokenomics of a lot of these very large market cap projects that people keep FOMOing into. That these projects have 6, 10, or more $billion market caps, and there's no connection between the token and the success of the company. I think this is a massive bubble that potentially could burst if people wake up and realize holding the token means nothing.
I think it's starting to burst now. I mean, those pumps that we've seen over the last couple of weeks, for a lot of altcoins, over the last, I don't know, maybe 6-8 weeks, many of them have gotten some nice pumps. And you know what you need to get a great dump? First, you need a pump. And so all these alts that they've, gotten these pumps, giving it all back.
And so, look on chain, Ondo, the Ondo Finance, they were moving and selling massive amounts into the pump. And I was yelling on our X account, take profits, take profits, take profits, take profits.
Yeah, but people want to take screenshots. Like they don't want to take profits. They want to take a screenshot of the not profits, and then they want to give it all back. I think that we go much, much lower.
I would tend to agree. But that being said, let me jump into the socials and we will get on with the show. All right. So if you want to join the conversation, join the chat, comment, we're all here to learn, myself and David included. Our chat constantly, cues us in on things that maybe we didn't know or calls us out on bullshit. If we get something wrong, we're open-minded here. You show me where we're wrong, cite your sources, show us with facts, figures, logic. We're more than happy to admit that we're wrong. I don't, your opinion is your opinion, as my opinion is my opinion. But if you're going to say that we're full of shit, I expect you to tell me how. And, I would appreciate you to tell me how, because I want to make sure we're putting out good info. But that being said, you can follow us at the Node Network, all one word. You're watching this show here. Later on today, David and Ellie will be doing the market wrap and live coaching session. Jeff has a blockchain report show right after this. And this weekend on Saturday, an old friend of mine, his brother was my group commander in my SF unit in the Army. He is actually going to be coming on the show. I'm going to be doing an interview. And he developed a red dot course, basically a shooting system to help people get lead on target faster, and has done really well with it. Has actually gotten a bunch of reviews from people with that have been professional shooters for decades, and it's improved their shooting. He's helped out 3-letter agencies in the government, all kinds of stuff. So really great interview coming up on Saturday. We have, obviously this show Monday through Friday, 9 a.m. Pacific. Crypto and Chill, Tuesdays and Fridays at 5 p.m. with me and Jeff, where we just, kind of shoot the shit, talk about life and, what's gone on in crypto since the last show. The Blockchain Report, Monday, Wednesday, and Thursday, immediately after this show. That is where Jeff does deep dives into very early projects. And one cool thing is these deep dives. They have, videos, PowerPoint presentations or slideshows, all kinds of really, really good material. They are going to be added to the ones that we do on this show that David puts together in our repository, our library on the node.pro. So you can access them. If you're thinking of investing in a project, you can go and you can go through the material and you can look at the tokenomics, the fundamentals, what it is they're building, the use cases, the partnerships, all that stuff. So you don't have to go out and dig it for yourself. And it's as of right now, it's going to be at no charge. So just like DeFi University, we just want to educate you here. Yes, we have products that we sell. That is for going to the next level. Entry level stuff, we like to keep it no cost, no gimmicks. Sovereign Soil. This is the one I do on Saturday. Like I said, I'm going to be doing the the red dot course this weekend. But this is where we talk about emergency prep and homesteading. I did 22 years in the military. Been doing emergency prep for over 20 years now. And since I retired out of the military, I've been a full-time homesteader. So that's been over 10 years now. So I just share my experience in our community. Sometimes if they're a subject matter expert, they come on the show. Jay, one of our community members, came on and shared his prep just a little while back. So yeah, a lot of great material there. The market wrap, like I said, David does about 15 to 20 minutes of technical analysis on the charts at the end of every day, what went on in the markets that day. And on Tuesdays and Thursdays, he does a coaching session with Ellie. On Saturday, Saturday Night Fever, Jeff, one of his passions is being a DJ in the San Francisco Bay Area. So he knows a bunch of local DJs and does interviews with them. Went to over Memorial Day weekend. He went to a bunch of events and did a bunch of interviews as well. But they do tutorials. They just spin music. Great time. If you're just hanging out on Saturday and want to check it out. The Red Pill tonight. Don't know what we're going to be talking about yet, but this is all the hot topics. Usually it's us, drinking drinks, smoking smoke. and talking about and debating, hot button issues, politics, religion, legalization of, drugs, ancient civilizations, whatever. And then gaming and chill. This is on Wednesdays and Sundays at 6 p.m. Jay and Ellie from our community like to jump on and game, and they're gracious enough to stream it for all of you out there. So if you're looking for a place to hang out and chat with the community and just kind of watch some gaming, great place to hang out. And then we just launched this, the Node 24/7 music. So there's some really good. It's AI generated, so it's all original music, and it's just to vibe to. So if you want something playing in the background while you're coding, while you're working out, cleaning house, whatever, driving, this is a great way to just have some cool music playing in the background. And I've actually been listening to it, and it's been it actually kind of helps me focus. So yeah, I'm actually kind of digging on it, because it's not really my style of music that I usually listen to, but again, as background music, it works really well.
Yeah, no, I think it's great. And there's another one coming out today, Mike.
Oh yeah, yeah. No, I'll actually. We need to figure out a way for you to get that to me, because I want to live stream it so I can make sure that the banner's on there and I get it to all the different socials and stuff like that.
Nah, I mean, the views on YouTube are, I think, the exposure on YouTube is what's important, and those premieres seem to work. So the live stream, for whatever reason, didn't generate the same amount of traction as the premiere did.
Well, we can try it with the premiere, but my understanding from what you told me is without the banners, it's not monetized at all.
Nope, that's not true. I was wrong.
Okay, all right. So yeah, no, if we don't need the banner, cool. All right. So Ellie's asking what's coming out today.
So it's actually, Mike, if you head on over to the Intel, if you go to the Intel section on the website, this is the first post. I'm just still getting this dialed in a little bit if you scroll down there. So we're going to be talking about Plasma, and we're going to be talking about Avantis. And I don't quite have this exactly how I'd like it, but if you click through to that post there, Mike, I'd like to be able to play and go through the content from the website moving forward, rather than me just doing a screen share. This is
no. That's perfect. That's perfect. I mean,
that's pretty cool, huh?
Well, it highlights the website, and gives people the information as well. So yeah, no, I'm all for that. All right. Well, let's hurry and do this real quick. So if you want to follow us on X, it is at the _network. And this is where I, go in, and throughout the day, I'll just share different news stories, different, breaking news that I find. Be warned, if you follow me, I have a lot of, different conversations with people. All this morning, I've been trying to educate people on the tokenomics of projects like XLM, XRP, Ondo, these projects that are seeing, some positive gains. But trying to help people understand what is behind those pumps, that it's not, tokenomics or fundamentals or a connection to the underlying protocol or chain and its profitability. It's purely based off of posts and, news, positive news about the project. But a lot of people aren't able to grasp that these are not securities, that there is no connection with, some projects there are, but with a lot of them, there is no connection between the token and the profitability, or, the revenue or the fees generated by the protocol or chain. It's a very simple concept, but a lot of people just instantly put up, these barriers, as soon as they feel like that you're, talking negatively, about their baby, you're calling their baby ugly, they immediately get defensive. And
yeah. So, Mike, you know what Benjamin Cowan likes to do? He likes to say, "Hey, I'm not talking about your altcoin, okay? Just talking about altcoins, but not yours, not your particular alt."
Yeah.
I mean, yeah, and most of those alts have given back all of their gains. So,
and it is what it is. I'm not saying that you can't make money, off the speculative pumps and dumps and stuff like that. 100% you can. All you need is volume and volatility to trade these. But if you're going to buy them and hold them based off of posts of people saying that they're going to go to the moon at some point, not going to happen. Like with XLM, same as XRP. I pointed out it would take, I forget the exact number, but it was thousands of years at max TPS, or throughput of like 4,000 TPS with the XLM token being 0.00001 XLM per transaction. At max TPS, it would take over 5,000 years just to burn 10% of the supply. It is not going, no matter how much that this chain is used for tokenization or anything else, it is not going to burn through enough of the token to make price go up. If anything, it is grossly overvalued, with billions of dollar market cap that is based off of nothing because it's not a security. There is no correlation between the value of the company and the revenue that it generates and this token. So it's so important that we understand
Yeah, it really is. I mean, that's the case for literally most of crypto. Like it's almost like an outlier when we come across a project where the tokenomics look really, really good and there's a solid connection between the business's revenues and the token. That's like rare.
No, and a lot of, I feel like that we're careening towards a cliff, like basically a .com bubble burst, style, what would you call it, the Altmageddon, where a lot of these tokens are just gonna freaking dump and never recover. And strong projects that have good tokenomics, that they're sharing the fees and the revenue generated through burns and programmatic buybacks and things like that, potentially, not guaranteed, but potentially are going to weather that storm, and they're going to be the Microsofts, the Googles of crypto, in the future. Again, not a guarantee. I mean, I love Canton. I love Arrow. There's a lot of these that have better tokenomics. Is that a guarantee that I'm going to make a bunch of money? No, but it's a better chance than these projects that have shit tokenomics, that there is no connection, that you're buying a meme coin. Worse than that, because people don't know they're buying a meme coin. They think they're buying utility, but they're not.
People don't understand that utility doesn't mean number go up. The coin can have utility in the ecosystem, like you need to use it. But if its tokenomics are shit, then number go down. When Ford Taurus, not when Lambo.
Yes. They had 1995 Ford Taurus. And not even a show, not even an SHO. We're talking about the base model, cloth seats. So, all right. So if you want to go to our official website, thenode.pro, this is where you can find all the stuff that I am telling people about on X. No cost DeFi and crypto education, no gimmicks, no hitches. Just go here, go to the Learn tab. You can go through the DeFi University. There, again, this costs nothing. You have nothing to lose. If you're one of those that I've tried to talk to on X and you're checking us out, here on the show, I highly encourage you to go through this course, because if you do it with an open mind, you might be surprised at what you learn. We got that. We have our intel. So this is what we're going to be going through today.
Doesn't that look dope? Yeah, I'm working on the Avantis intel right now.
Yeah, no, I'm definitely digging this. So all of the deep dives that Jeff does on the blockchain report, and all the deep dives we do here on the node, the 2 a day that we do, are going to be going into this library, and you can go through it at any time you want. If you run across a project and you think, oh yeah, that might be, one thing. Okay, you got it. Search. All right. Yeah. I mean, basically, if you think, I'm thinking about investing in, this project or that project, come in here, search. And if there's a deep dive, it might save you some time, to go through these instead of having to dig through, the interwebs, for hours and hours and hours on your own, read through white papers and all kinds of shit. All right. Now, The newsletter. So as of right now, I would use the no cost version. Just do the preview and check it out. And use the links in it, verify the information, things like that. We're still tuning this up. How's that going, David?
I haven't, spent any time on the newsletter so far in the last like 48 hours, like working
Oh
on
no.
it. But I think that if you run the no cost brief, the preview on the website, um, see, I'm pretty sure that the brief on the website is working. I'm pretty sure that the pre market and post market briefs are working 80% of the way there, the ones that get to your email address. So the one that you see on the website here, Mike, the newsletter on the website,
Yeah.
this is, I think that this is working. I mean, when I'm looking through it right now, just on my end,
Yeah.
and it's mostly working. Like I'm taking a look at like some of the on-chain metrics don't quite look right, but that could just be like a data parsing issue from one of the APIs. So I'm just reading through this real quick, and I mean, it looks legit on the website. I definitely need to make a couple of changes to it. Like, if I had to give it a rating, to 100%, like A plus, there, it's ready to go.
Yeah.
I'd say that like between the no cost website version, the version that you get when you actually pay for it, when you log into your account,
Mm.
and then the emails that get sent to you twice a day, it's like 85% of the way there.
Mm.
So yeah, it's I think it's quite valuable. And once it's like polished, then yeah, it's going to be my source of information for just about everything that we talk about on the show.
Oh,
Um,
absolutely.
so
No, I mean, because it has, on-chain metrics, it has the liquidity flows, it has the ranges for, if you want to enter a trade, if you want to enter a liquidity pool, it gives you the catalysts of, what's moving the markets. It gives you the big news story of the day, it gives you, multiple, news articles and our take, on what's going on in the markets. But all of it is based off of the assets that you choose. That's the cool thing is you choose the assets you are interested in. It's not, I don't choose them. David doesn't choose them. It's not odd. That part isn't dictated for you. You choose the stocks, the commodities, or the crypto projects that you're interested in, and it generates your newsletter custom for your assets. It's a beautiful, beautiful thing.
that is pretty
So
cool.
excited. I'm so excited for this.
Yeah, it's almost there. So I'd say it's like look, I mean, if someone wants to buy it, then it's like at a B. I'd say it's a solid B right now.
If,
But
if,
once it gets to A plus, then it'll be extremely valuable.
Yeah. If you do buy it, just make sure that you use the links that are supplied in the newsletter to, double check, the information, because we link, we cite all of our sources. So you can click on it and, go to those websites, go to those news articles, go to the different places. What the hell was that? Man, I had some critter on my hat. Um, so, but yeah, I mean, it's just go and verify. Just it's always good to do that no matter what. And then this is the coaching course. So under the coaching tab, this is what David today will be doing with Ellie and has been doing for the past couple of weeks. This is the one-on-one coaching. We wanted to pull back. David wanted to pull back the curtain a little bit and show people what they get. If they purchase this service. This is one of our few paid services. So if you are thinking you might be interested in this, you can schedule a no-cost consultation with David and go over, your risk, kind of your risk profile, your current portfolio, what you're wanting to invest, where you're at as far as your education, and together you can determine if you're ready to to go to the next level, for this intense one-on-one coaching and accelerated program, or if he might direct you to go through DeFi University and give you some modules to get you more up to speed, because we want to make sure that you get the max benefit. If you're going to pay for something, we want to make sure you get the max benefit, because we want a satisfied customer. We don't want to just take your money and then if we don't care if you get value or not. We want you to be happy, because a happy customer is going to go out there and sing the praises of our products and bring us more customers. I mean, let's be honest.
100%.
And we have our community. So if you want to join our no cost Discord, again, it's we have stuff that you can join that and be a part of the community. We're in there. Anytime I'm awake, I have it open on my laptop while I'm working. I have it on my phone. We're always answering people. If you have questions about having wallet issues, we'll never ask you for access to your wallet, but I've asked our community before. I've had issues with my wallet connecting to certain sites. And so I'll go on and I'll ask people, hey, is anybody else having issues with their Coinbase wallet connecting to Aerodrome? And get some input and be like, okay, well, it's not just me. It's everybody. So I can relax. But it's a great place to hang out. We share all kinds of information about homesteading, about working out, about cooking, crypto, DeFi. Scotty D, he's always dropping really good alpha in there. He's one of our moderators in there. But and the moderators do a really good job of keeping all the scammers out. Pretty much as soon as they come in, they're kicked out. But you can join the Discord. We also have on Mondays, Wednesdays, and Fridays one of the paid services is for $99 a month. You can, and there is a 7-day no cost trial that you can join the advanced live calls with David, myself, and the rest of the community. And it is advanced DeFi and crypto traders. And so usually David has a lesson that he shares with the community, but it's an open forum. So anybody on the call, it's a video call, anybody on the call can share opportunities that they find on for interest rate arbitrage, for looping, for whatever it is that they find to where they are making money, or maybe something that they tried and it failed. So it's a great place for mentorship. If you're looking for someone, again, David has the one-on-one coaching, but maybe David's risk profile, maybe you're wanting to take more risk or less risk. Maybe just you want to find somebody that's more aligned with your style. Then we have a whole community of people that you can tap into and find somebody that aligns more with your goals. So that's one thing. If you're curious.
So Mike, what did you think of the session yesterday where we took a look into the Hyperliquid ecosystem and the Hyper EVM chain, and we're just taking a look, looking for opportunities on there because Mondays, Wednesdays, and Fridays, those calls, if you're not ready for private coaching, or maybe that's not what you're looking for, you want to learn in a group setting, I think that the Monday, Wednesday, Friday calls, that's probably a better fit for you.
I really like the live calls just because I like looking at who I'm talking to, because there's so much that can be lost. Me and you experienced that yesterday morning. There's so much that can be lost in messages and texts and stuff like that, facial expressions, tone of voice, all that kind of stuff. So I just really enjoy, face-to-face conversations. I'm kind of old fashioned like that, just mostly because it gives you a lot better understanding. Like I actually, the majority of the value that I get out of a conversation is body language, tone of voice, things like that. As far as, it's just as far as what I take away from a conversation. It's part of my military training, I guess. But that's kind of the way I'm wired. But if you're interested in when our different shows are on, you can go to the YouTube channel and you can look there. But this is a really nice snapshot of the calendar. Just the different days of the week. Like today, we have this show, the blockchain reports after this, the coaching session and market wrap with David, and then tonight the red pill. So you can just check here and you can see what shows we have going on. And as you can see, we are a network. We have a ton of live shows and shows on this network. And then we have the store. So this is we keep working on this. It is all this stuff is up for sale. if you want to help support the channel. If you don't, that's fine too. But if you like any of these designs, any hoodies or hats or anything like that, we definitely appreciate the support. So go ahead and check this out. If you're like most people right now and money's tight, please like, follow, share the channel. It actually does a ton to help us out. And if you find anything that we say here valuable, any of the information that we put out valuable, it doesn't cost you anything to scroll down and tap that button. So with that, let's jump into the news.
Let's do it.
All right. So we got 30 minutes for news. Let's see what we got. All right. Geopolitical shockwaves drive massive sell-off. Liquidations near 1 billion. A major risk-off flush is sweeping the crypto markets following the fallout from recent U.S. military strikes on southern Iranian positions. The escalation has reignited global inflation fears and triggered a severe capital flight from risk assets. Bitcoin has tumbled down towards the 72K range, while Ethereum suffered a brutal crash. And David, you've been saying a short on ETH for a while, but breaking below the vital $2,000 psychological floor to touch roughly 1985, its lowest price since early April. The damage. The total crypto liquidations are fast approaching the 1 billion mark, currently sitting around 900 million in flushed out longs, heavily driven by historic 1.3 billion single day outflow from Bitcoin's ETF as institutional money temporarily steps to the sidelines. So what are you seeing along these lines, David?
Oh man, so I'm not necessarily even focused on Bitcoin or ETH or Solana for that matter. What's been so interesting to me, Mike, if I could just share my screen real quick, is some of these other alts, and I'm not talking about your alt. I'm talking about these others.
Your alt's awesome.
Your alt is awesome.
Your alt is awesome.
So Hype, this one, broke out to fresh all-time highs, and notice where it found support. So this is really interesting to me, the way that Hyperliquid found support at the breakout. So you've got this parallel channel that Hype was trading in for basically year to date. Year to date it was trading in this channel, broke out to the upside, put in all these wicks up here. So far this is a false breakout, but the way that it's holding this level of support, that's pretty encouraging for Hype. But as we start to take a look down this list a little bit here, here's Tron. That looks ugly for Tron. So
but David, you've been saying for a while now that that you see, I mean, for like a month or two now, since we rebranded, you've been saying that there's going to be a pullback, probably up until October, as where you're expecting that the bottom is going to be, before we move into the next bull. And I mean, and I know that based off that, I have a short in on Bitcoin, and I'm up 10% right now, based off of your intel.
Yeah, well, I mean, that's good intel. And for Tron, this is a false breakout. And the dump over the last 2 days, if history is any guide here, then this sharp move to the downside, we could see more movement lower out of TRX. This chain is basically like the stablecoin payments and remittances chain in Asia, especially in Southeast Asia. And it's Tron is where like half of all stablecoins live. Like I think it's like 80 or 90 billion dollars of Tether USDT lives on Tron, specifically in Southeast Asia. Like that's where the majority of the payments flow.
Massive amount of stablecoin TVL on Tron.
A lot, yeah. So Hyperliquid, these guys generate a lot of trading volume, which means trading revenue, and that's used to buy back the token. But there's a lot of unlocks for this token every month. So those buybacks need to be greater than the unlocks.
And that's what you put it out on that call yesterday. And it's, we've mentioned it on the show during the deep dive as well. I didn't mean to cut you off. I just want to point out the value in those calls, because you were pointing out to the community that yes, those programmatic buybacks right now, because of the profitability of the protocol, because they use those fees to do those programmatic buybacks, as long as it's making those profits to do those buybacks, you're going to see this type of movement. But if that flips, it's going to have the reverse effect.
Right. And, there's a lot of unlocks every month. It's like 2 million tokens, something like that, every single month get
That's a
unlocked.
lot to suck up.
It really is. And the buyback pressure, if, like if Bitcoin and
It's
ETH,
like on
like,
Spaceballs that Mega made. She's gone from suck to blow.
oh my God, yeah, that was a great movie, man. I like that one. Wasn't that with Mike Myers or something? I think.
No. That was oh shit. Oh, Honey, I
I
Shrunk
don't,
the Kids.
I don't
What
remember
was?
the actor's name.
I'll look it up. Keep going.
Yeah, yeah. So with hype here, volumes moving lower, and this is KuCoin data, but volumes moving lower as price goes up, that divergence, that is not a sign of some type of aggressive accumulation. That's distribution. So price going up as volumes decline, that's distribution. That
Oh,
tells me that, big players are unloading on the way up.
it was Mel Brooks, John Candy, and Rick
Oh
Moranis.
yeah, Mel Brooks. That's
Yeah,
right. Yeah,
and it was
yeah.
Rick. You were thinking that it was Mike Myers, but it's Rick Moranis.
Yep. Yep. Got it. So yeah, hype, this one, as long as it holds the breakout and continues to push higher, it'll be okay. But I just don't see how that's going to happen if trading volumes decline as this Bitcoin bear market really continues to unravel here. So Tron moving to the downside near, this one was everybody's favorite, yesterday?
For a minute.
Like,
Yeah, yeah.
yeah, like for like 5 days, dude, as much as I like Arthur Hayes, his calls have been horrible for like the last year and a half. Like, look, he bought hype, he bought near, he made a bunch of money, but then he ends up pumping his own bags at the very top right
Yeah.
when things sell off. Like, you
Well,
know,
something that I've noticed about a lot of the OGs, that made a bunch of money, early on in Bitcoin, is I think they're still trying to use the same models and the same techniques that they were using in the purely retail speculative market. And with the market evolving, and with institutions coming in, and so much has changed, they're still trying to use those same strategies. And I think that that's what's destroying him, because it's not just him. It's there's a lot of them out there that I don't think have, and he's much smarter than me. Don't get me wrong. I'm not saying that I'm, freaking Nostradamus and I'm going to be able to do better. But I think that says a lot about, their past success and how they're starting to struggle a little bit. Is we're going from that speculative market to a utility market, and it's a whole different ball game.
yeah, and the thing for me about near though, and this is one of Arthur Hayes's, like, he called them the holy trinity of altcoins,
I saw
where
that.
yeah, it's hype and near and Zcash. Um, the one thing about near is, this is actually pretty cool, that near app, which I've got right here. I can just share with everyone real quick, where they allow, they enable confidential swaps. Like, this is super, super cool. I'm definitely going to be testing this out today. And Ellie and I might actually use this thing here. So this might be something that we'll use together just to see like how it works. Because I mean, dude, the whole idea of being able to swap confidentially that's a big deal. So if this stuff actually works, then maybe picking up some near, if it's able to move back down to like 90 cents, that might be a great buy, because what other protocol allows you to swap confidentially like that? I don't think that there's another one that exists, except for like maybe Thorchain, but even that's not confidential. That's like right out there in the open. Um, so yeah, no, I really I like the tech, and as long as it works, well, then and the tokenomics aren't shit, then I'll buy some near. You take a look at something like Render. This one we were talking about, its price to sales multiple up here at like $2.40 was like
Yeah,
325. Like,
that's
what?
that's terrible.
Yeah, and they've got a lot of competition too, and this is just a technical breakout. So if this breaks down below $1.75, I would watch for a send to 40 cents. So yeah, and then going down the list a little bit here. Here's BitTensor Tau. This is one of the higher quality AI plays, and this thing at $259 didn't even make it up to trendline resistance up here. So I would watch for 145 bucks on the downside. And XMR today, XMR dumping. And take a look at this pattern. So this is a head and shoulders pattern that is playing out here on Monero XMR, and we get a break of this level of support at 318.
It's a cone head, head and shoulders.
Yeah. So I mean, look, but it's getting close to like important support. Like 320 needs to hold. If 320 doesn't hold, then there's basically like this big channel here, depending on how you draw it. You could draw it in like that. And it might head down to like the sub $200 region if 320 doesn't hold. So yeah, be careful of these altcoins. Not talking about your altcoin, but just altcoins in general.
Your altcoin's awesome.
Your altcoin's awesome. Like let me get some of that one. So here's another one. This is part of the altcoin holy trinity, according to Arthur Hayes. This Zcash asset. So I've never used this thing natively. But I certainly would like to see. I thought that they were about to launch like smart contracts on Zcash or something like that. So if they ever do,
something about that.
Yeah, it was in the research that we produced, a couple of weeks ago. And dude, I'm really, really happy that we've got this intel all set up here.
Yes.
It gave me an error a second ago, so I'm just gonna fix. Yeah, there we
go. Don't mind that little guy.
Yeah. So, but this is super cool, man. And we're gonna have all of our intel up here, so it's everything. Like, if anyone wants to go through this stuff, this is extremely valuable. I also made it so that we can publish the source information. So that's all right here. So pretty soon we're gonna have a big intel library of hundreds of protocols and coins and just a ton of research information there. So that'll be super valuable for everyone. But what else is going on in the news? We've got 15, 20 minutes until the deep dive research.
All right. So next up in the news, institutional DeFi adoption. VanEck launches the first spot BNB ETF. Tokenized fund lands on Yulen. Despite the broad market bleeding red, institutional infrastructure pipelines are moving forward aggressively. I always love to point this out. No matter what the prices are doing, if they're dumping, if they're pumping, if they're trending sideways, institutions, banks, governments, they just keep building. And in a lot of cases, keep accumulating, key projects, tokens. We see it with Canton Network. I mean, daily they come out with, not rumors of, but actual institutions and banks launching live projects on their chain. You almost never hear about things ahead of time with Canton. You never hear about rumors. They are really good about, not leaking information, and they don't hype. They're just like, whenever it goes live, they do an official press release. They do an official announcement. They are a new validator. They're a new super validator. They launched this, and this is what we're doing together. Boom, done. It is one of the most professional, one of the best tokenomics, and by far one of the best token launches, like if not the best token launch I have ever witnessed. And yes, I own a bag of it. Full disclosure. But the reason I do is for the things I just fucking mentioned. I had never heard of Canton all the way up until all of a sudden it popped up on RWA.xyz and they had $400 billion of TVL, running the repo markets, the daily repo markets, and making like $2 to $3 million a day in fees and revenue that potentially will be shared with token holders, once if it ever flips deflationary. If again,
I think it's got a solid chance to do that. Yeah, no, I think it does.
Well, but we need to be we need to be realistic and point out it's not a guarantee.
No, no, of course not. But if you compare Canton CC to like just about every alt except for your alt, what
Yeah,
your alt,
because
like
you're
your
all
alt,
I want to kiss your alt. It's
your
beautiful.
alt, your alt's great. But Canton has probably outperformed it. Um, so and this one, I view this as like an isolated play, like maybe a little bit less correlated to, the rest of the, altcoin space, I guess you could say.
Dude,
Yeah.
my Canton bag has severely anchored my portfolio. I used to get a lot of swings when we saw stuff like today. Now my portfolio does not budge like it used to. I really really like Canton. Do your own research. Not saying go buy it, but I love how stable it is. And I think you're right. I mean, you've said it that if it ever does, flip deflationary through, the burn mint, mechanism and, reaching that equilibrium and surpassing it, a lot of potential, for price to go up. So,
Yeah. Yeah. No, I think if they're able to get that, the Berman equilibrium in check. And if we see more repo volume come onto that chain, as it looks like we're going to, I read some research, it must have been a couple of months ago about JP Morgan Chase and Goldman Sachs, their plans over the next 24 months. And just think about that. And that was several months ago. So now it's like over the next 18 months, 18 or
yeah,
20 months, their plans are to basically migrate about 15% of their repo book onto Canton and Connexus, those digital rails. So that's a big
trillion.
deal. Yeah,
Yeah.
that's a big deal. We're talking about like major, major money there.
And I'm going to point it out again. There's a huge difference between, that happening on Canton and that happening on XLM. That those tokenized assets that are being shilled right now and, hyped. With Canton, there is a connection, through that burn mint mechanism that potentially could make the price of the token go up and return value, through the network usage back to us, the token holders. Whereas XLM has nothing in its tokenomics that is going, to make the coin go up based off of network usage. Yes, it's used as gas, but like I said before, it's going to take thousands of years at max at using the maximum amount of throughput that it's capable of to even knock out 10% of the token supply. So no time in your lifetime, as long as once the retail hype and stuff is gone and people realize what they're actually holding, if it doesn't dump, after that, it's once it actually finds its actual price, you're not going to see a whole lot of movement in the token price, because there is no correlation between the success of the underlying company. And yes, Stellar is a not for profit, but they do have another arm of their company that is for profit, and the architecture of that basically is legal. It allows them to have the token, sell the token, and gives them basically an umbrella against the SEC and regulatory bodies and stuff, because it's a nonprofit. It's the same reason why rich people start trusts, and they have different layers where they have LLCs and all those things, because it has legal insulation for taxes and other things like that. So I won't get into that, but do your own research on it. I'm not buying it. But your token is beautiful. But your token is beautiful.
Yeah, no, your alt, whatever your alt is, man,
Yeah.
that's oof, that is so nice.
I wish I could get my hands on that. All right. So the VanEck double play. Asset management giant VanEck has officially launched the first ever US spot BNB ETF on the NASDAQ exchange today, providing Wall Street with a direct regulated vehicle into BNB chain ecosystem. Concurrently, VanEck's tokenized fund has officially integrated into the DeFi lending protocol Euler, illustrating how institutions are continuing to court DeFi liquidity pools and even during volatile cycles. Grayscale halts. In contrast, Grayscale has reportedly delayed its highly anticipated IPO plans as the wider crypto public listing boom loses short-term steam amid the macro downturn. So, what are your thoughts on that, David?
So let's take a look at Euler because I was actually looking at these money markets earlier this morning, Mike. I was thinking to myself, I'm short Bitcoin and ETH over on GMX, and my risk management protocol does not allow me to, go to allocate too much to any one protocol.
Yeah.
Like if, heaven forbid, GMX, there were to be something horrible that happens with GMX, and I were, massively allocated to GMX, I could, be, shit out of luck. Kind of like Solana holders, SOL. But so I was looking at a handful of different money markets. Euler. I actually looked at Aave V4, and I was also looking at Morpho. Now, I gotta be honest, I don't really like Morpho all that much, and Aave V3 I can't ever use ever again, and Aave V4 it's like not a whole lot of liquidity there.
Well, I
Um,
want to make sure that people understand why you don't like Morpho, because my guess would be that it doesn't have a lot of the advanced strategy opportunities that you like to use. Like with the
uh,
the
it- it's
borrowing and
mo-
lending loops and things.
it's mostly like UI UX.
Okay,
I would say that because there are a lot of opportunities on Morpho, but it's really just like ease of use for me.
okay.
I that's basically it. Nothing wrong with Morpho. I just I don't like using it for some reason. It just
No, no, no.
kind of
I just want to make sure that people understood why.
yeah. So that's the reason why. It's just
I know that you like the architecture.
oh,
You
I
like
do.
you like a lot of things about it. It's just I want to make sure that people didn't just say, "Oh, David doesn't like Morpho."
No, 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 no. It's just for me, user interface, user experience, that stuff is extremely important. And you know,
Well, especially
I just
with financial protocols. A lot of them, like yesterday when you were on some of those, different protocols, you were pointing out, the data, that it was giving, and you're just like, this, unless you really know what you're looking at, is, valueless or pointless. This over here, the data that it was given, you were pointing out that there was, it was hard to understand even for you. And so it's, yes, a very clear, concise, UI, UX, UI, user interface, user experience. Those that don't know what that is very, very important. It's one of the issues I've had with Aerodrome. I'm hoping that they get better at it. There's a lot of the user experience is the big part that I've always had an issue with. Just entering and exiting pools, having to do all the figuring out, how much of an asset I need to swap to have an equal amount of the two assets to enter a position, or, if I'm not entering, an exact 50-50, how much do I need to sell of one to get it's a pain in the ass. I just want to be able to say, this is the liquidity I want to use. This is the position that I want to open. This is the range, and do it. That's what I want.
well that type of AI aggregator, those exist, but most of them kind of suck.
Oh yeah,
So
like
yeah,
VFAT.io was a big one I was using for a while.
yeah, VFAT uses proxies, and those proxy contracts. Although I don't think there have been any, recent exploits on the base chain of VFAT. Back in the day, right after the base chain launched, a lot of those protocols on base were using proxies, and so I just kind of stay away from it. But over here on Euler, the reason why I'm sharing this is I want to see if I can find that market that we were just talking about that
Cool.
VanEck created. So VanEck, they tokenized bonds, and then Euler is a permissionless market, so anyone can create a vault on Euler. And so they used Securitize. VanEck used Securitize to create a vault on Euler. Yeah, Securitize, and
Security.
it's for their tokenized treasury product called V-Bill. So I want to see if I can find it. It doesn't even matter if I can find it because even if I do find it, I wouldn't be able to like enter a position because I think it's permissioned. I think that they're running like that KYC AML bullshit. Yeah, so here it is, VBill USDC. So there's the risk manager, securitize and KPK. It's got basically no available liquidity, supply, and let's see, utilization is very high. The borrow, okay, so if but this is cool though. We're seeing more and more of this, and this is what we were talking about yesterday, Mike. Where if you are an institution and you've got tokenized U.S. Treasuries, that's basically the majority of RWAs, and you've got these Treasuries on a chain somewhere, but they're just sitting there, and you can't do anything with it. Like,
Mhm.
what the
It's
fuck?
pointless.
Like, come on, man. Like,
Yeah.
come on, man. You got to do more than just like let it sit there.
Well, you got
Um,
to do more than just tokenize. I mean, the whole point of tokenizing it is to be able to make it more liquid. Make something that's illiquid liquid, so that you can use it in DeFi and borrow against it, or just yeah. I mean that's the whole point of tokenization. Just tokenizing it doesn't do anything if it's just going to sit there. You can just buy the actual treasury note or stock and just sit on it.
Right. Yeah. So I mean, but this is use. Like over here on Euler, being able to deposit V bill, which I don't even know exactly what this is. So, if they're saying securitize issued collateral vault for V bill, that's what this is. And V bill itself is a tokenized US Treasury fund. Like, I need to know a hell of a lot more than just that. Okay. So if this is okay, maybe they're allocated 100% to 30-year bonds. Okay, great. I need to know that. Or what if it's 50% bonds and 50% like 6-month bills? Well, want to know that too. So this is just not nearly enough information for me to be able to make a decision. But also, it says access is limited to eligible KYC approved users. We're going to see more and more of this stuff, especially for these bullshit RWAs. Like, dude, there's a reason why people, in TradFi call US Treasuries return free risk or toxic sludge, especially if the Fed is forced to start to raise rates. Like, I don't think we should even be talking about cutting rates. We should be talking about raising rates. And the reason for that is simple. This chart, PPI, inflation. So, with those evil fucks in Iran not capitulating and doing their best to just lob over rockets or whatever, and that strait remaining closed, that is going to put continued pressure on crude oil prices. So that means inflation has only one way to go, and that is up. So if inflation goes up, well, it's probably going to mean that interest rates have to go up. Now, what could change that? Well, if crude oil collapses and suddenly is down here at $70, then inflation would come back in. But that would take several months. Would the Fed act? They probably would not act to raise rates unless it was like absolutely mandatory, like absolutely required. And how do we know, whether the Fed's going to raise rates or not? And we've got 20 days until the next FOMC meeting in June. Well, we can see what the market is pricing. So over here on FedWatch, you can see what's priced right now. So there's a 1% chance of a cut in June. There's not going to be a cut, but there's a non-zero chance, or at least there was a non-zero chance of a rate hike in June. And the thing that we need to start tracking to figure out, is the Fed going to cut, or are they going to hike, or are they going to do nothing and pause? The thing that we need to be tracking here is the 2-year. So the 2-year bill is the yield on 2-year treasuries. This is what the Fed funds rate tracks with a lag. So if you plot the yield on 2-year US bills, US Treasury bills, if you plot that against the Fed funds rate, they look identical. It's just that the Fed is almost always late to the party. They don't anticipate what the 2-year is going to do. They react to what the 2-year does. So if we see 2-year bills pushing higher, that means yields pushing lower. That's a good thing. And if we see the same thing, over here with crude, if we see crude starting to break down, as you see 2-year bills pushing a little bit higher, well, that could be a positive thing for inflation expectations over the course of the next several months. Like, you got to continue to watch this. This isn't just like, a day trade. This isn't something that you just watch for a week. And of course, all that, noise out of Iran, that's going to impact this. And, if you take a look at digital assets like Bitcoin, now that it's rallied, what is that? A rally of like 1,000 points off the lows. The lows today, 72.6, we're at 73.4. So an 800-point rally off of the lows. If we get a little bit more of a rally up to like maybe 74, like another 1,000 points, I'm going to be adding to my shorts, like in a big way. So yeah, that's just what I'm thinking about here. I think that, this is still a Bitcoin bear market. We've got all this geopolitical tension, which is adding some spiciness. It's getting muy picante. And if we just take a look here, though, notice last bear cycle, and these are Binance data. Last bear cycle, look at that volume that we got at the lows. That's called accumulation. This is accumulation. This is what we're waiting for. And I just hope that we don't have to come down and test this level of support down here at like 3.
Because those of us that have some dry powder on the side, we're going to be able to, buy the fire sale.
Yeah, well, I mean, if you get Bitcoin down at 32 or 33, man, you got to back up the truck. Like, sell everything that's not nailed down.
I'll sell a kidney.
Dude.
I'll do, yeah.
And, same thing for Ethereum. Like, as much as people like to dump on Ethereum, for this reason or for that reason, like, ETH is a weird asset, man. Like, when it runs, it goes straight up. And you better hope that you bought the lows at some point. I would love to be able to buy some ETH down here at like $1,200 or $1,300. If I get a chance to do that, I'm definitely going to. Solana, I'm not convinced that Solana survives. Maybe it does, but if it does, I'll be definitely buying Solana below $30. This bear market, if I get an opportunity to buy it below 30, I'll buy it below 30. And then when it comes to altcoins, Hyperliquid's great, but I just want to be a little bit more cautious with this one. I like Tron.
I think hype is just too overbought right now for me to get in, and where we're at in the market, because a big part is what you mentioned in the the call yesterday, the private call, where again, if the revenue on the protocol, drops to a where it almost has the same mechanism in place, if you really think about it, as the burn mint mechanism on Canton, where as long as the fees are outpacing the mints, then it's deflationary. But if it ever flips to the other direction, to where they can't buy up through those programmatic buybacks, if they can't keep pace with the tokens, then the opposite. I mean, we could see a huge dump in the price. So that's what
definitely
I'm
possible.
And there's a lot of time between now and October.
Yeah, there really is. I mean, it's the end of May, so we got June, July, August, September. So we've got 4 months. That's 120 days. A lot can happen in crypto in 120 days. And take a look at some of these alts like Tron. This is a reversal candle on the weekly. It's Thursday, so we've got the close.
And it's looking like it's testing that level again.
Well, I mean, so this at Tron, the breakout. This is now a false breakout. Yeah. And we got this big reversal. So we've still got, 3 full days until this candle closes. But, that's just kind of negative. You take a look at near, and, near, this is a big reversal candle too. So you're going to see the same type of reversal candles on the weeklies. The more alts you look at.
Isn't it when there's a huge, wick on the top of the candle like that? Doesn't that mean that it means that there's a lot of sell pressure?
Yeah, this is also referred to as a topping tail. So
Okay.
this is a tail, and yeah, a big topping tail like this makes me think that this breakout, this technical breakout, that you might just see this reverse.
Gotcha.
So, and then you take a look at some other items that I want to buy, like BitTensor Tau. I just got to wait. I've just got to be more patient because this rally, if it gets down below like 230, then
Hmm.
it's going to send to 150. And then XMR, I really like Monero, but if we get Monero below 320, man, watch for 190. So there could be an opportunity to pick up, these alts at much cheaper prices. I just hope that Bitcoin is able to hold, this level of support at 48. Now, if Bitcoin can't hold 48, if it gets down there and can't hold, then yeah, I mean, Mike, I think we go to the low 30s, like because that's the next level of support if 48 doesn't hold. So we've
Well,
first,
and a lot of these observations, throughout the day, David's posting similar stuff in our Discord, and it doesn't cost anything. I
yeah,
highly
definitely
suggest.
check the Discord. That it's a lot of fun. It's an active Discord. Mike and I are in there all day, all night, every day, 7 days a
Yeah,
week. So yeah, definitely a lot of value in there. Speaking of value, which piece of deep dive research do you want to start off with today, Mike?
really quick. We can hold on. DeFi exploits. Now we've talked about it. Yeah. Let's you know what? Let's go into Avantis. I haven't heard anybody talk about Avantis for a while, and I know that it's. I have a very small bag staked, earning, for quite a while now. Just want to, full disclosure, nothing substantial, but it is a perps dex on base network. And so let's start with that because I'm myself personally curious about it.
Sure. Awesome. So why don't we go ahead and just take a look at the protocol just real quick? And if anyone wants to jump ahead of me and hop into the Node.pro and navigate to our Intel, the Intel library, you can just jump ahead of me right now and start reading about Avantis. Because all the research, Mike, that was a great idea about that Intel library, dude. That was really good because this is fire, man. Like people
Yeah.
are like, this is great information. But
And the reason that we wanted to do it, and the reason why I brought it up was because we understand, it's when you have an hour of news and us talking, and then you have the deep dives, and we don't put the timestamps on there. Sometimes you just want to get the get the alpha. So we decided, me, David and Jeff just decided to build a library where you can put it, and you can just go and look specifically for that. So
yeah, no, it's even just right now, like even with just two articles in there,
mm,
like dude, it's gonna be great. We're gonna have hundreds in there pretty soon. But the first thing I want to do here is just take a look at Avantis over on DeFi Llama. Now, I've traded on Avantis in the past, and my experience honestly wasn't the best. Um, so let's just take a look at the website for Avantis. Now, why was my experience not the best? Well, because they advertise like low fee or zero fee trading. That's not real. Like, there's no such thing as zero fees. Like, they just kind of hide it. So, yeah, not exactly my favorite here. And you got to also turn on a VPN, which for me is a huge pain. I prefer not to use a VPN if I can avoid it. That's why I like GMX so much. So if I'm over here on Avantis, they also use this unified margin system, and they made some changes to that the last time I reviewed Avantis. So this is the UI UX. It looks like most other perps dexes, right? If I click on all here, you got all these different options. They do allow you to trade some commodities. So you could trade Brent and WTI. That's pretty cool, actually, because then you could trade, the spread. You don't necessarily have to trade one or the other. You could trade, Brent in WTI terms or whatever you want to do. When it comes to Forex, they've got a bunch of, you could actually put together some pretty complex Forex trades here. But here's the thing for me. If I go to equities, look at that. They've got some tokenized equities over here now too. pretty cool. And indices. So I'm assuming this is the S&P 100. This is the S&P 500. So, not bad. When I go to Forex, though, let's take a look at the yen. So this is something that I've been waiting to trade for the last several months. I really want to buy, if there's a breakout above 162 on the yen, I want to buy that. So basically, sell yen. I think that the yen would depreciate in US dollar terms if it breaks out above 162. Hasn't done that yet. It gets defended every time it gets close. But if I take a look at the borrow, like if I'm gonna, so if I buy this, then I'm long dollars, short yen. That's the trade that I would want. But look at these fees. So borrow fee, long, short. This actually isn't bad in this market. You could compare this to like Ostium. I think you can trade the yen over on Ostium with pretty competitive funding. I don't know if you can hedge your funding rate on Hyperliquid, or if there is even a yen market on Hyperliquid. There probably is, but yeah, so this is a little bit about Avantis. Why don't we go ahead and jump on in to the research? And I think, Mike, one thing that I'm going to do with, you see all the written report here?
Yeah.
The written report is not easy to read. So build a plan to update the written report section so that it formats the written content in a better way that is easier for users to read. Okay, great. So for all of the reports moving forward, this is going to be formatted better, where we're going to have like call outs, bullet points, a little bit less dense. And then if you want the real dense stuff, then as you scroll down here, you got the slide deck, of course, but there's the source material. So if you want the source material, you can get that right here, and you can download this stuff too. So you can go through this, at your own pace if you want to. You can download the slide deck here also. And the thing I want to start with, though, Mike, is I want to play the video content here for Avantis. So let's go ahead and get started with this one. Let me open this up.
For years, synthetic
And Mike, can you hear this one? Just let me know if you can't.
derivatives operated across isolated liquidity pools. Capital was fragmented, execution slow. Today, that landscape is collapsing into a single execution architecture. At the front of this migration is Avantis, a native universal leverage layer built on Coinbase's base chain. By late 2025, the protocol crossed a critical threshold, absorbing over $100 million in total value locked. It achieves this scale through synthetic tokenization, allowing traders to access up to 50x leverage on major cryptocurrencies without ever holding the underlying digital assets. The architecture extends well beyond crypto. Traders can take capital-efficient positions with up to 100x leverage on traditional real-world asset categories, including foreign exchange. It also covers physical commodities like silver and oil, giving users pure price exposure to gold bars sitting in a vault without requiring physical custody. Avantis operates as a comprehensive synthetic liquidity framework. It accommodates retail margin strategies while supporting institutional high-frequency traders through specialized 500x leverage modes. This analytical dashboard evaluates Avantis in two halves. On the left, we decouple its technical execution layer from its economic constraints on the right. First, we map the engine, analyzing its unified liquidity vaults, its dual Oracle price bounds, and its integration with AI agents. Then we run the equation. We model the exact mathematical tension between the protocol's value accrual mechanisms and its linear token vesting schedule. A protocol can possess brilliant engineering, but that machinery still has to mathematically survive its own internal supply inflation over time.
Right.
To determine if AVNT is a viable long-term asset, we first build its technical machine, and then we directly test that machine against its balance sheet. This diagram maps the foundational mechanics of the Avantis model. At its core is a unified liquidity vault. It requires only USDC as collateral and acts as the direct counterparty to all outstanding trader positions. When traders close profitable positions, their payouts are drawn directly from the vault's principal. Conversely, net trader losses accrue directly to the vault, distributed to the liquidity providers taking the opposite side of the trade. To optimize this capital pool for varying risk profiles, the protocol implements a dual risk tranching architecture. The senior tranche is tailored for capital preservation. These liquidity providers absorb exactly 35% of cumulative trader profits and losses, offering a lower risk, steady yield. The junior tranche is engineered for high risk tolerance. It captures a much larger share of trading fees, but absorbs 65% of net trader profit and loss, yielding highly volatile returns. To protect these providers from severe directional skew, a dynamic risk engine offers positive slippage and refunds up to 15% of losses to contrarian traders who actively bet against majoritarian sentiment. The unified vault solves liquidity fragmentation on the base network, while strict mathematical tranching isolates conservative liquidity providers from catastrophic degenerate risks. High-leverage synthetic exchanges process massive volumes of capital in milliseconds, making them prime targets for oracle manipulation and toxic arbitrage. Execution safety is paramount. Looking at this price chart, we can see how Avantis enforces a dual oracle verification pipeline. It starts with the Python network acting as the primary low-latency feed to facilitate rapid trade execution. It then applies a secondary verification layer. Chainlink feeds establish strict price bounds to cross-reference the Pyth entry ADA. If the Pyth price diverges from the Chainlink boundary by more than 1%, the transaction is automatically invalidated. The vault is shielded from stale or manipulated data. Beyond internal execution security, Avantis established a unique distribution moat in May 2026 by integrating directly with Coinbase's base model context protocol gateway. This open-source standard allows AI agents running on Claude or ChatGPT to autonomously monitor portfolio health and execute complex perpetual swaps on behalf of users, requiring only manual cryptographic signatures. By positioning itself as the native leverage engine for autonomous AI agents, Avantis detaches its volume potential from the friction of traditional web interfaces. This flowchart breaks down the zero-fee perpetual model, which is the protocol's primary user acquisition tool and the starting point for the equation. Under this model, traders pay absolutely zero upfront execution, opening, or closing fees. The protocol extracts fees exclusively as a profit share percentage from profitable trades. If a trade
Yeah, see, this is the part that I really didn't like because you make money on a trade and, you end up paying potentially more in fees when you're profitable than if you had just paid a small fee up front to enter the position. So,
Gotcha.
yeah, I don't like the, zero fee model, that idea, because it requires that you abstract away those fees into something else. It makes them a little bit more difficult to understand. And that was, part of the reason why I disliked trading on Avantis. Another reason why I dislike trading on Avantis is when you deposit, it's not a true DEX. You have to deposit into this like unified smart contract. So, and you can only deposit, I think, USDC. And sometimes I don't want to deposit USDC. Like, maybe if I want to get short ETH, I might want to deposit some other type of collateral rather than stables. So yeah, those are just two things I want to point out here. Now, when you deposit into the Avantis protocol, a lot of times my wallet can't see the position. I can only see my capital and the position when I'm logged into Avantis. So what happens if Avantis, goes belly up and there's some problem? Like, even if you're just sitting in USDC on Avantis, you're probably fucked.
Or
So
what if that smart contract where everybody's depositing the USDC, there's an exploit? Do they have a single, key, that we've seen on a lot of
I
these
know,
other, a
I
lot of these
know.
other protocols that have gotten, exploits?
Seriously. So, I mean, there's a couple of problems for me with this Avantis protocol that have kept me from using it. And look,
Mm.
there's no contracts on Avantis that like I need to trade that I can't trade anywhere else.
Oh, I
You
mean,
know,
it has some cool functionality. I mean, if you're into FX markets, if you tokenize commodities, it has some cool stuff. But yeah, like you said, it's not stuff you can't find other places.
Right. And then if you take a look at the Avantis token, this is kind of telling you, what the market thinks of this protocol here, um, or at least of its tokenomics. But if you also take a look over here on DeFi Llama, big run up in TVL, and
Mhm.
then basically big collapse in TVL.
I
So
mean, to be fair though, I mean, we've seen that in a lot of DeFi protocols. I mean, Aave being one, due to the exploit and things like that. But pretty much every DeFi protocol, after October 10th and the following, exploits and stuff like that, it's just made people really skittish.
right,
Especially institutions on
but
DeFi.
Mike, like the best protocols are seeing their TVL numbers recover or go to fresh all-time highs, actually.
Oh,
So,
absolutely, absolutely.
so
But it just, I mean, but pullbacks, do happen. Is all I'm
sure,
saying.
sure. So something like Morpho is seeing its TVL rocket, and then if we're a little
And a
bit
lot of that, I
more
think, came from Aave, and I mean, we've been talking about that potential flight. Where is that liquidity that was on Aave? Where was it going to go? Was it going to
and
get sidelined? Was it going to move over to Morpho and other projects with or protocols with better architecture? That those vaults where it separates out the liquidity instead of having that pooled liquidity architecture.
I
Just
think
things like
yeah, no, and maybe a bit of a more fair comparison would probably not be Hyperliquid to Avantis. But I'm just trying to make the point that the
look at
best. Well,
what's that?
what's another base chain perp dex?
I don't think
Um,
there is one, but look at what is that BNB one? It starts with an A.
oh, Aster.
Yeah, yeah. Look at Aster.
Yeah, so I can't even tell if this is like a dex. I don't think this is a true dex. I think that this
It
is.
was. It's. I think it's a perps dex, just like Hyper Liquid, because they were like like in competition there for a minute because both of them were just pumping, and Aster, while its price was pumping, the TVL was pumping because I mean everybody was talking about it, everybody was using it, and Hype was kind of like in a close second. And then I think a lot of people realized that I think it's like 90 or 95% of the tokens are held by like a handful of wallets, and basically they could dump the token at will. And so I think a lot of people realized that and said and went over to Hyperliquid.
Yeah, so I'm over here on DeFi Llama, and so when it comes to Aster, I'm pretty sure that Aster is like some type of weird Chinese scam, like how they merged it with Binance. It's
Binance is the one
basically
behind it.
right. Well, it's
That's why
like
everybody was so bullish.
I think a lot of the volume is like wash trading, or at least that was the speculation. And then like the way that it's a so-called DEX, I think that was just like they basically built like a wallet connect into like their Binance margin engine or something. Like it's just very, very shady. I don't trust them.
Yeah, it's a
Um,
decentralized perpetual contracts. And so it just like Hyperliquid.
yeah, we got to do a deep dive on that one, on Aster, just to find out what's what.
No, no, absolutely. I think either me and Jeff or me and you did one on the tokenomics because that's where I learned about the 90% or 95% of the tokens held by like 5 different wallets. So I pulled up that bubblemaps.io. I don't know if you remember,
Yeah,
and it was showing all those bubbles because you hadn't seen it before, and you're like, oh, this is cool, and
yeah.
it shows basically where the token holders, the wallets, represented as a bubble of how much of the token supply that they each hold.
Yeah, and it's basically like, what is it? 96% is held by like 5 guys.
Yeah,
Like, you know, like
or 5 wallets,
right. Well, probably 5 dudes. You know what I mean? Like,
probably, and they're probably like in India or something. Like that.
I know. Well, I mean, so they're probably Chinese. So it's Binance.
Yeah,
But here's the Aster token. Just dump, dump, dump. Um, so yeah, we've got a little bit more left in the video content. Let's go ahead and finish up the video. So this was back to Avantis, and It's about their fee model. Their fee model is kind of funky.
Trade is closed at a loss, it incurs zero platform fees. This revenue is then split mathematically among participants. Margin and liquidation fees are intentionally excluded from the profit share to compensate liquidity providers for vault utilization and to fund baseline treasury operations. The remaining capital feeds the systematic buyback and burn mechanism. A minimum of 20% of daily trading revenue is programmatically used to purchase AVNT on the open market and destroy it. This engine aligns user incentives with token holder value. It uses a zero upfront cost product to attract volume, which translates into continuous deflationary pressure on the token supply. That deflationary pressure sounds highly effective on paper, but we have to contrast it with the reality of the AVNT supply side. Ownership is highly centralized, with the top 100 wallets controlling over 86% of the total supply. This
Oh,
balancing
yuck.
scale models the
There you
primary
go.
structural headwind, a recurring monthly unlock of 4.8 million AVNT tokens
No,
allocated to
not
on-chain
good.
incentives, early backers, and the core team. At a baseline token price of 24 cents, this vesting schedule injects roughly $1.15 million of new supply into the public float every single month. To see if the deflationary engine can survive this inflation, we model the buyback demand against the baseline annualized trading revenue of $19.2 million. Under the initial 20% buyback model, the monthly buying pressure only generated $384,000. It completely
Not
failed to
enough.
offset the dilution. The Q2 2026 tokenomic upgrade scales the open market buyback ratio to 50% of daily trading revenue, significantly increasing the counterweight. But even at a massive 50% buyback rate, the current revenue levels leave a persistent $190,000 monthly deficit. The value capture mechanics are highly aggressive, but at current volume levels, they are structurally outpaced by the insider vesting schedule. To survive this scaling phase, Avantis utilizes its security module as a primary safety valve to absorb excess floating supply. Token holders can stake their liquid AVNT to provide a capital backstop for the unified USDC vaults. In exchange, they receive up to 25% APR and trading fee discounts. But this yield carries strict risk.
Right.
Staked capital is subject to a maximum 30% slashing cap if the vault buffer ratio drops below 0% during a black swan market event. Pulling these two halves back together reveals the full picture of the protocol. On the technical side, Avantis has built a highly secure, institutional-grade derivatives platform with true multi-asset diversification across crypto, forex, and physical commodities. On the financial side, the 4.8 million token monthly unlock creates a constant structural headwind
Right.
that requires continuous demand to prevent price depreciation.
Right.
Closing that $190,000 monthly supply deficit is entirely dependent on one variable: scaling daily trading volume to expand the fee revenue. For institutional allocators, Avantis represents a perfectly engineered financial machine racing against its own tokenomic clock. Its long-term viability hinges on whether its first-mover advantage in AI agent execution can drive enough organic volume to mathematically outrun its dilution schedule.
Yeah. Well, if that happens, then maybe Avantis can survive and thrive. That's a big if, though. So, yeah, for right now, I would probably just pass on using Avantis. I think that, for me anyway, there are better exchanges that I prefer, and user experience is really important to me. So, yeah, I'm going to pass on Avantis for now. But I'm very interested to learn more about AI agents on Avantis, and maybe at some point we take a look at virtuals, because if we're talking about like base chain protocols and AI agents on the base chain, trading for you, then maybe we talk about Avantis, maybe we talk about virtuals, maybe we talk about how they're communicating with each other with X402. So definitely things that we can discuss.
Another project that I brought up yesterday or the day before, a totally new project that has to do with AI agents. What was that? Go ahead and jump into the next deep dive. I'll see if I can find it.
Cool. Okay, so the next one, we're going to take a look at Plasma. And I got to say, Plasma is one of my or was. I don't have any positions on Plasma any longer, but it was one of my favorite chains to operate on because it's basically instant. Transactions are basically instant, and it's super cheap, extremely cheap to operate on Plasma. It's basically a stablecoin chain, and I'm sharing the DeFi Llama data first so that you can see. After it launched, at one point it was up at $6.3 billion in TVL. That was the day before the October 10th flash crash. Now it's sitting at only 830 million in TVL, so it's down like 80% in TVL. And the majority of that TVL still lives on Aave v3. Pendle, there's a bunch of tokenized stuff going on Pendle. Fluid's got a couple $100 million in TVL. And Yuzu had a big problem at one point. I think Yuzu got hacked at one point or something like that. So what I want to do here is learn a little bit more about the Plasma chain, and also about, I think that they're about to launch next month in just a couple of days here, their Plasma One neobank. So I really want to be able to use that. So yeah, Plasma One, EtherFi, Goblin, Tria, those are four neobanks or cards that allow you to spend crypto in real life. So let's take a look at Plasma One. This will be
Stablecoins
interesting.
now settle tens of trillions of dollars annually, acting as the primary clearing rail of the digital asset economy. But the infrastructure processing these fiat-kegged assets is compromised. Legacy Layer 1 blockchains treat stablecoins as secondary class tokens, forcing them to compete for block space against high-intensity smart contract executions. This subordination exposes institutional payment flows to unpredictable network congestion and highly volatile transaction costs. To address this structural flaw, the Plasma Layer 1 blockchain launched its mainnet in September 2025. It is a high-performance network purpose-built specifically for stablecoin settlement. Founded by digital asset veteran Paul Fakes, the protocol is an entirely independent network, completely unrelated to the 2017 off-chain scaling proposal of the same name. Supported by entities including Bitfinex, Tether, and Peter Thiel's Founders Fund, Plasma has rapidly emerged as a highly capitalized public chain. We will break down Plasma's modular three-layer architecture, analyze the mathematics of its gas abstraction paymaster, and expose the systemic contagion risks hidden within its decentralized finance integrations. To process fiat-pegged assets with the latency of a centralized clearinghouse, a network's architecture must ruthlessly prioritize stablecoin velocity over generalized execution. Looking at the protocol stack, Plasma handles high-throughput settlement by decoupling its core functions into a modular three-layer design. The top tier is the execution layer, utilizing Reth, a high-performance Ethereum client written in Rust. Because Reth provides full EVM compatibility, developers can deploy unmodified Solidity contracts using standard frameworks directly onto the network. Below execution sits the consensus layer, governed by the Plasma BFT engine. Derived from the fast hot stuff protocol, this engine maintains network resilience even if up to 1/3 of the validator set acts maliciously or drops offline. The mechanical advantage of Plasma BFT is its ability to run the proposal, voting, and commitment stages concurrently, rather than waiting for each to finish sequentially. The base tier acts as the settlement layer, operating as a dedicated Bitcoin sidechain. Plasma periodically checkpoints cryptographic summaries of its transaction state routes directly onto the Bitcoin blockchain. By anchoring its history here, any attempt to reorganize Plasma's ledger would require an attacker to remine the Bitcoin proof-of-work chain. This modular decoupling allows the protocol to achieve sub-second finality while inheriting Bitcoin's security base, entirely bypassing native proof-of-work energy costs. A persistent point of friction in digital asset onboarding is forcing users to hold a volatile native token simply to pay for a stablecoin transfer. Plasma bypasses this friction using an in-protocol paymaster smart contract that intercepts standard transaction requests. The network utilizes Tether's omni-chain OFT standard, USDT0, as its primary unit of account. This deterministic paymaster equation calculates the sponsor transaction fees across the network. The required gas payment is represented by GU, while delta E functions as a binary eligibility variable. The value of delta E is dictated by strictly coded on-chain rate limiting algorithms designed to prevent network spam and Sybil attacks. If a transaction qualifies, delta E equals 1, the user's fee immediately drops to 0, and the paymaster absorbs the cost by drawing from a foundation-funded quota. For complex smart contract interactions where free transfers are disabled, delta E remains 0, triggering a fallback mechanism. In these instances, the paymaster utilizes an enshrined on-chain automated market maker. It intercepts the user's custom ERC20 stablecoins, swaps them into the native XPL token on the backend, and burns them to cover the fee. Mathematical gas abstraction effectively translates L1 block space into a frictionless neobank-style retail experience.
Right, that's what
The
we
network's
need.
native utility asset, XPL, secures validator staking and dictates protocol-level governance. Rather than utilizing principal slashing, which risks discouraging retail validator delegation, the network applies reward slashing. Dishonest or offline nodes lose their accrued yields, lowering the economic risk of participation. This formula models the programmatic inflation designed to bootstrap that network security. The emission rate begins at 5% in year 1, decaying linearly by 0.5% annually until it hits a permanent floor of 3%. However, the token carries structural supply overhang risks. Out of a 10 billion total supply cap, only a fraction currently circulates.
Uh-oh.
Between December 2025 and May 2026, the market must absorb nearly 89 million newly unlocked tokens on the 28th of every month.
Oh, wow.
That supply expansion compounds heavily in September 2026.
Okay, so that's the 28th is today. So why don't we take a look at XPL? XPL, this is the plasma token.
Dumpy
And
dumpy.
oh, just horrible. It looks so dumpy, dude. Yeah. So this is kind of what you should expect, though. You know, if it's got this horrible inflation schedule and there's a bunch of token unlocks that haven't happened yet, you know, and most of the supply isn't floating, then you should kind of expect this to just print lower low after lower low. So yeah, that does not look good.
When a hard cliff unlocks the initial team and private investor allocations. To counter this inflation, the protocol implements an EIP 1559 style mechanism where the base fee of every standard transaction is permanently burned. For the asset to resist dilution, the protocol's daily transaction velocity must scale aggressively enough for the fee burn rate to outpace its programmatic emissions. Generating that requisite transaction volume relies on Plasma One, a consumer neobank built to translate on-chain liquidity into retail adoption. The platform targets emerging markets by issuing physical Visa debit cards and enabling zero-fee international settlement directly from mobile devices. This diagram outlines the mechanism powering the neobank's core feature, dynamic savings yields exceeding 10%. The backend programmatically routes idle stablecoin deposits into blue-chip decentralized lending hubs and delta-neutral basis trading protocols. While this architecture generates substantial consumer returns, it introduces
Yeah, these yields of 10%, they're no longer advertising 10%. That was part of the reason why I was so excited about the Plasma One neobank in the first place. Simply because, you know, I saw those yields and I thought, oh man, this is amazing. How can I, you know, do 10% on my checking account? But those yields, if we just take a look at the Plasma One front end here, so this, oh, get early access, great. Is it going to actually allow me to use it? So 3% cash back. They changed the website, by the way. 10% back for the first week. No. So they changed it to like 4% from 10%.
Yeah.
So, okay, great. Awesome. Oh, an Android coming soon. What the fuck, man? I can't even use it. I want to be able to use this thing. Oh, dude. Okay, well, soon. Maybe I need to buy an iPhone. I don't want to buy an iPhone.
What is it? You use an Android?
Yeah.
I
I
do.
use a Samsung, but it looks like it's only for iPhone. So
That's usually most apps when they launch. They always go with iOS first, and then they do Android.
well, hopefully soon. I really want to use that Plasma One neobank.
of cross-protocol bad debt contagion. The March 2025 Resolve protocol exploit demonstrated this composability risk. Attackers minted 80 million unauthorized USR stablecoins on an external chain. Those unauthorized tokens were subsequently deposited as collateral into Fluid's liquidity pools directly on the Plasma network, creating a massive deficit that required a $70 million debt repayment program to resolve. Routing stablecoins through modular DeFi architectures binds the Layer 1's retail safety directly to the weakest link in its composability chain. The mathematical limits of Plasma security extend to its canonical Bitcoin bridge. To mint-pegged Bitcoin, the bridge relies on a decentralized network of validator nodes holding individual shards of private keys, requiring a strict mathematical threshold to process withdrawals. If this validator network becomes highly concentrated, or if subtle logic flaws exist within the multi-party computation libraries, the foundational Bitcoin collateral could be permanently locked or exploited. But the final, existential hurdle for the protocol is entirely legal, operating under the European Union's strict Markets in Crypto Assets framework. MiCA classifies single fiat stablecoins like Tether as electronic money tokens. This subjects them to severe operational restrictions if issuers fail to grant statutory redemption rates to their users. Because the Plasma Foundation is an unlicensed entity, it cannot act as a core clearing network for assets facing strict European scrutiny without risking severe regulatory penalties. To manage this, the protocol is executing an aggressive compliance pivot, establishing a European corporate entity in the Netherlands, and actively pursuing rigorous electronic money institution and crypto asset service provider license.
So I thought that the Netherlands wasn't that becoming like little Syria or maybe big Syria. I thought that was going to become Islamistan over there in the Netherlands. Like, why do these crypto DeFi protocols care what these regulators have to say? Why not just operate in Southeast Asia? And if people in the European Union want to use the product, turn on a VPN. Like these regulators, man, these people are awful, horrible.
Licenses. To defeat enterprise incumbents like Stripe and Circle, Plasma must prove it can legally marry permissionless Layer 1 engineering with strict global financial compliance.
Well, okay. So, yeah, I mean, the problem for me with Plasma is I can't use it. I want to be able to use the neobank.
Yeah,
And
yeah.
if I can't use it, then I can't test it yet. But I'm really excited to be able to use it, hopefully soon. So, yeah, man, I'm looking forward to being able to use Plasma here. And let's see, what do we got going on? So now that we've taken a look at both of those, pieces of deep dive research, Mike, anything else that pops out to you, as you're taking a look around that maybe you want to talk about here today? Because I'd be more than happy to just run through, some TradFi stuff. The Nasdaq here, man.
Go ahead.
This
Go ahead and do some charts. Show people what's going on in the markets right now. Because I mean, we see that the crypto markets are getting a strong pullback. I mean, what is in contrast? What is traditional markets doing?
Well, I mean, traditional markets are doing nothing but going straight up, literally straight up. So, I mean, this is the NASDAQ, and this is a weekly. So, this is basically the last 15 years. And, this type of performance is just amazing. Um, so, yeah, straight up for the NASDAQ. And we just got a re-rating from Goldman for the S&P. They're talking about, their expectation is 8,000 on the S&P by the end of this year. So, that's just a couple hundred points away. If we measure that real quick, to get to 8,000 on the S&P, that's only another 5 percentage points to the upside. So, I mean, this has been one hell of a performance out of the Nasdaq and the S&P, and just beating the hell out of Bitcoin. If you price Bitcoin in S&P terms, I think what you're going to see is number go down recently. So let's just see what we get here. Yeah, check this out. So this is Bitcoin in S&P terms. And this tells me that there's probably more downside ahead for Bitcoin and more upside ahead for stocks. Um, I mean, here's support. Support's all the way down there at 7.4. And if we just measure that and figure out like, okay, how much more downside ahead for Bitcoin in S&P terms? Well, it looks like at least 20%. So, and that's just to get to support. So yeah, this doesn't look good for Bitcoin. And now, what if we price Bitcoin rather than pricing it in S&P terms? Why don't we price it in Nasdaq terms? Bitcoin in Nasdaq terms, and in Nasdaq terms, you get something very similar. So you basically got that same level of trendline support, but notice where Bitcoin is currently trading in Nasdaq terms. It's trading at support. So if this fails, then really the next level of support isn't until here. And that would mean continued like massive Bitcoin underperformance in NDX terms. And look, institutional capital allocators, they're going to move slowly, but if there's an opportunity cost, and you're holding Bitcoin and you're giving up the opportunity of owning, all of these tech stocks that are just ripping every single day, eventually you're going to sell that Bitcoin. And Michael Saylor's only got I think he's got like $800 million in cash, which is very, very little compared to what his obligations are. And he's got like what, $75 billion in Bitcoin. Saylor might become a forced seller pretty soon here, just to make the dividend payments for that stretch product and his other products. So yeah, this is going to be a consequential bear market for Bitcoin. Now, I want to take a look at some of these TradFi assets like Tesla and Apple and Google. So Tesla here, this is a weekly, and it's basically very, very close to breaking out. So if Tesla can break out above this level of trendline resistance, then watch for it to test $500. You take a look at something like Apple, AAPL. This one doesn't have all of that massive capex spend that. Oh, and look at what Ricky posted in the chat. XPL to $1 easy. That's great, man. I mean, sure. We all have a dream, a hope and a dream. Probably need a prayer for that one too. But Apple up here at 310, this thing, it doesn't have that major capex, and they can just buy AI companies if they need to. Here's Google. Google, just amazing performance here, straight up, from $270 to $400. I mean, dude, we're talking about a multi-trillion-dollar company that is up nearly 50% just in the last 8 weeks. So this is like a repricing of these tech companies. And the reason why they're getting repriced is because their earnings are just exploding to the upside. We're seeing earnings growth from these big tech names of double digits. And, in some cases, like 25% earnings growth. So you don't get stock market crashes when earnings are exploding like this. Speaking of, amazing earnings, NVIDIA rallied into its report. And then after the report, it just kind of moved sideways and sold off a little bit. So this one, if NVIDIA is able to, print some fresh highs here above 236, this is just one of the leaders. But we've also got to take a look at semis, SMH. So, I mean, this has just been a nonstop tear for semis here, but you've got mind the gap, So when you start to get gaps on these charts, if we just take a look on the daily, this could be a bit of an island forming up here. So just be cautious. And also, we've got to take a look at the Kospi, because a lot of these other, indexes around the world, traders have been chasing. And so this is the Kospi. So this is the South Korean index. And yeah, basically just straight up for the entire past year, which is amazing. So 4x in 12 months on this index. And then I think we should probably also take a look at the Nikkei and just see what's going on over here. So these, Asian markets, where a lot of the chips are produced, a lot of that stuff is actually made. You got to watch this. So if you ever see a correction out of the Kospi, out of the Nikkei, then it might just be a matter of time until that correction shows up for S&P 500 items. But for right now, I mean, this is just like it's so hard to step in front of this and get short. Like, how do you sell a rally like this? I don't know that you can. And the problem though is that the VIX is just getting crushed here. So the reason why that's a problem is whenever you see volatility get crushed like this, eventually volatility starts to expand again. So what could be one of the drivers for expanding vol? It would have to be rates, but rates have been falling over the last couple of days. So, just because, rates on the 30-year broke out to 5.2% and pulled back doesn't mean they're going to continue to pull back. So, yields here, if they push to the upside again, it would likely be because crude oil is breaking out again. And here's the Japanese 30-year rates. So, this is something to watch. I think that there's not only is there a Fed meeting next month, I think that there's also a Japanese decision next month, a BOJ meeting next month. And for whatever reason, the BOJ, rate decisions have been, correlated with crypto. So if they raise rates in Japan, which a lot of people are speculating that they might, if they raise rates in Japan, that could, be another thing that would give crypto a push to the downside. And let's see here, what else we got going on? Yields in the 10-year. So there was a breakout, but now all the way back down to that level of trend line support. So we got a false breakout on yields here. I got to hand it to Secretary of the Treasury, Scott Bessent. He's very, very good. And whoever he's working with at the Fed, probably Warsh now, they're very good at controlling this. But for how long will they be able to control yields? If crude doesn't meaningfully collapse, then yields have nowhere to go but up. So it would just be cautious there. Now let's go ahead and take a look at crude oil a little bit. What type of pattern do we see here? Well, we could throw down a level of support like that, maybe something like that. Give this is a bit of a false breakdown, I guess you could say. Or we could go like this. If I just grab a different trend line tool, use this as my anchor. I'm looking at this on a daily and draw this out. Okay, so we could say that there's support down there. That's definitely within reason. I kind of like that. Or you could just cut it off right here. And you could say, okay, well, that's a false breakdown. I'm not quite sure which one of these I like best. Maybe something like this. It's just, I don't think that there's any validity to the claims being made by the administration that we're close to a deal with, terrorists in Iran. Like, how do you negotiate with people who have never kept their word ever on anything? The answer is you can't. So I don't think that there's ever going to be a deal there. The only thing that they're ever going to respect is violence. So, that means those straits, will they ever really reopen? I don't know, but crude is going to tell us. So I want to continue to watch crude here. And then another thing that I like watching, and this is more interest rate sensitive items, is the Russell. So the Russell here, these smaller market cap interest rate sensitive items, fresh all-time high yesterday, but stocks are showing no real signs of exhaustion here. So you might expect stocks to just continue to rip. So if stocks are going to continue to rip, why don't we take a look at software? This is IGV. So the thing about this that's kind of funky is this was at one point very tightly positively correlated with Bitcoin. And if we just go ahead and remove these drawn objects so that this is a bit clearer, and then if I just throw Bitcoin over top of IGV, look at that divergence recently. You see that divergence? So if I just zoom in there, so the correlation really started to pick up last April. And this is some alligator jaws that are forming here. So you've got, you've got this price here for BTC, this price here for IGV, and this is, the jaws here. So which one is going to catch down to which? Are we going to see Bitcoin catch up to software, or are we going to see software catch down to Bitcoin? Or has the correlation completely broken down now and is no longer valid? So I was watching software, almost like a tell or a leading indicator for the direction of Bitcoin. But it seems as though these two have decoupled and are no longer correlated with one another. So I'm watching this gap here on software. So if we just throw down a horizontal here, this would be a beautiful, like textbook gap fill. And, hey, stocks unrelentless, relentless yield, relentless runs. So let's see here. We got 4 minutes left. One thing that I really want to take a look at later on today during the call with Ellie is I want to take a look at that near protocol. I want to actually try using this in confidential mode to swap, asset A for asset B. So if I've got USDC and I want to swap that for a Zcash, let's say, can I do that using near? Will this actually work? So I really want to test this out, because if it turns out that this actually works, oh man, that is really cool. And it gives me spot Zcash in my near account that I can then send to my Zcash wallet. Or maybe, it gives me spot Sol, confidential swaps, remember, that I can just send to my Solana wallet, or spot Bitcoin that I can send to my Bitcoin wallet, or spot ETH, of course, that I could send to my, EVM chain accounts. Take a look down here. What else we got? So we can swap into Tron, spot Tron. That's pretty cool. Maybe Sui if you like the Move programming language. A lot of people like AVAX, maybe Toncoin. Let's see, you got some Tether Gold. What else we got on the list here that catches my eye? Just scrolling down through this, looking for, stuff that's probably higher quality. So there's a handful of assets here that I would really be interested to be able to swap into. I just want to see, it says centralized exchange speed on chain. So near intents is the most exciting trading technology to have emerged in recent years. Here, you can swap anything for almost anything else. Bitcoin to ETH, no problem. ETH to Zcash, no problem. Zcash to Solana, no problem. It says it's fast and cheap. So swapping between assets in your account happens within a couple of seconds, as competing solvers compete to give you the best price every time. Look at that grammar. That's horrible. As competing solvers compete. So thanks, Near. But I'm looking forward to using this. Let's take a look at Earn. So, okay, it looks like it says coming soon. Imagine being able to earn on your Bitcoin balance in your Near wallet. That's pretty cool, man. Private deals. Okay, it says private deals are not yet available in confidential mode. So let's turn off confidential mode. And what are private deals? Is this, if I create a deal, is this almost like a limit price? It says, say you want to swap some Bitcoin for ETH with someone anonymous you met on X. Normally, you need to find a third party or an escrow to hold the funds, but with near intent deals, you can configure the swap, send a link to the other party, and when they execute it, the funds are exchanged atomically and instantly. Wow, I like that. I like that a lot. And then contacts in here. That's so cool. I can create contacts. And so here's, I just, set this up with a hot wallet, like a burner wallet. I've got my address. Let's check out the settings. So I can give this account a label. I'm running it in dark mode. This is actually really cool, man. This is really, really cool. I just got to be able to use this. Like, if this works, Mike, the way that I think it actually will work, then hey, you know what? If Near ever pulls back, back down to $1, I'm buying myself a big bag. But gotta dive into the tokenomics a little bit more on Near just to make sure that number go up. So with all that, I want to just bring it on back over here to the node.pro. This is our website. And what we did today is we ran through the 2 deep dives. These are featured.
You gotta share that screen.
Oh, got it. Yeah. So over here, the node.pro, we ran through these 2 deep dives today on Plasma and Avantis. And as we continue to do this, there's going to be a ton of intel over here at the node.pro. If you want to join our Monday, Wednesday, and Friday private calls, then take a look at our no-cost Discord. You can join the Discord here and join the premium private calls right here. A lot of alpha there. If you're looking for private coaching, take a look at the coaching page. I'd love to talk to you. Our newsletter is almost there, but this is going to be really, really valuable when it's complete. And if you're looking for cool merch, the store is ready to rock and roll. So definitely check that out. But if you just want to build a skill set, hop into the Learn tab, scroll down a little ways, and there's all of this course material that I built out, the beginner stuff, introduction to DeFi, all the way to like really complex perpetual futures trading concepts. So a lot of information here, a lot of value for anyone, whether you just want to learn, build a skill set, buy a t-shirt, join us on the private calls, you want private coaching, whatever it is, take a look at the node.pro. Mike, so that's what I got for everyone.
Awesome. Well, I appreciate everybody for showing up over on Arena and checking us out and giving us those follows. We appreciate all of you in the chat, as always, contributing to the conversation. And if you want to join Jeff, the blockchain report should be going as we speak. If you want to pop on over there, and later today, David will be doing the market wrap up with a live coaching session with Ellie, and tonight we will have the red pill. So I'll be getting that topic together here soon and get that up on our X. If you want to see what that's all about and join us, you can join us on X, YouTube. We'll probably be streaming it on the Arena, but you can watch it in all those different places. So till next time, Veteran Crypto out.
Peace.